community land trust grew out of the civil rights movement in the U.S. The first community land trust was established 50 years ago, led by Slater King, cousin of Dr. Martin Luther King Jr. Douglas Community Land Trust builds on this legacy, the spirit of Frederick Douglass, and the work of more than 250 community land trusts in different regions throughout the country. Racial and economic justice center our mission. Douglas Community Land Trust is a membership organization. We invite you to join.
Hello, everybody. Welcome. My name is Sylvia Salazar, and I am a board member of the Douglas Community Land Trust. I'm also the chair of the stewardship committee. So welcome today. If you haven't heard so already, this meeting is being done in English and in Spanish. And if you need access to interpretation in English or Spanish, click on the globe on the bottom right-hand side and indicate which language you would like to use. Let me just provide a quick introduction to my colleagues and also welcome you to the meeting. Douglas Community Land Trust is named after Frederick Douglass, and we are a membership organization, and our main purpose is to create community-based affordable housing in DC, so that we can address some of the issues that are causing people to lose their homes. And we do this in various ways. We provide support to existing affordable housing providers like co-ops and different types of affordable housing providers, so that they can have access to the resources they need to be successful. And more than anything, as somebody, I myself, I'm a member of the board of directors of my affordable housing cooperative in Northwest DC. And, one of the things that we co-ops face is, especially on the boards, is understanding the finances of how you manage a property. And so this resource that is being offered today is an effort to provide support to different co-ops and housing providers so that we can better manage the finances and especially the audits that we are required to do every year. And this is part of the ongoing stewardship and that support that we need to succeed. So I'd like to thank Maresca Jones, I hope I'm saying your name right, and McElwaney?
It's just JM&M. I'm sorry.
Oh, JM&M. Thank you. Yeah, thank you. And also some of our community partners. I wanted to thank the Neighborhood Legal Services Program and Housing Counseling Services and Mikasa. And also, we are practicing language justice today. And we're working with YNS interpretation team, Laura and Ryan. And I'm gonna ask if we could speak a little bit, slowly, so that the interpreters have time to catch up to what we're saying. So with that, I'd like to hand it off to Adam for the speaker introductions. And I'd also like to introduce some of the staff members from Douglas Community Land Trust. If you could please introduce yourselves and say hello.
Yes, sorry y'all. Hi, my name is Adam Moon. I am the Director of Stewardship, and I will be helping facilitate. And Ginger, do you want to quickly introduce yourselves as well?
I was waiting for Ginger. Hello, everyone. I am Dr. Dinah Carter. I'm the Director of Engagement and Communications at Douglas Community Land Trust, and I'm so happy you guys are here, and I'm eager to learn too.
All right, thanks all. It is really great to see you all here. My name is Ginger Rumpf, Executive Director of Douglas Community Land Trust. Thrilled to have Sylvia as one of our board members, a very well-known organizer and leader at her own cooperative here. Very glad also to have our own auditing firm, JM&M, here to help to provide some assistance to all of us around how to prepare for and manage a great audit process. And I also just want to give thanks to our partners as well, particularly Mikasa and NLSP, who you'll hear from a little bit later. Thank you so much for being here.
Great, thank you, Ginger. Sorry, I had a little bit, here we go. My screen is sharing. Great, so I am happy to have JM&M on as our presenting partner. I'm happy they are okay going by JM&M because I would stumble over the longer name. As a regional CPA firm, they have over 25 years of experience working with audits, and we are very, very happy to have Tina and Terry here today to go over this with us. Without further ado, I am going to turn things over to the JM&M team. We should have sharing permissions if you'd like to do that.
All righty, everyone. Can we all see? All right, sounds good. Well, thanks again, Adam. Again, for the introductions and for us having here. It is our pleasure. And to get things started, you know, we ask ourselves, why do we need an audit, right? So for the board, it's important to have an audit because it's part of the fiduciary duty and just to understand what's going on with the organization and to see basically if the numbers that are being reported are accurate or not. And so we have things like validity and reliability of the financial data being presented. What does that really mean? Well, we want to see if the numbers that are being presented are in fact what they say they are, right? So those things will get tested. We evaluate the organization's business operations with respect to accounting practices and the financial reports. So obviously, depending on the size of the organization, you know, you have to tailor your accounting practices towards that. If it's not an overly complex accounting situation that you have going, then most likely you won't have too many layers of accounting policies and things of that sort. Another thing we have will be assessing the operating effectiveness of internal controls. So what does that really mean? Well, so for instance, if you have people generating reports such as schedules and reconciliations, is there a double set of eyes on that, if you will, if someone's checking over that person's work? And at the end of the day, we are to basically provide an opinion on whether the financial statements are being presented fairly and properly. So basically, if the numbers are what they say they are, and to give assurance to basically those that are viewing the financial statements. So this is especially important to people like banks and lenders. They want to know if it is wise for the bank to lend said customer money, especially if they're financing things such as big ticket purchases, leases, things of that sort. And feel free, if I'm going too fast, to slow me down or ask any questions as I go through these slides.
Yeah, thanks, Everett. I appreciate that. So most of the folks here, I'm assuming, are condo or co-op board members. So especially noting the relationship between management and how much they can rely on their management company and how much they should really oversee themselves, I think would be really helpful.
Yep. So it's actually really important for the board of directors and management to work in tandem and be in constant communication. The reason being for that is, as a board member, you should be well aware of what your management is up to, as well as to basically oversee the entire organization. You want to ensure that management is on the same page with the strategic plan of the organization to see how effective and efficient they are in carrying out their duties. A lot of the times when there's a disconnect or when there's a lack of communication between management and the board, that's where things pretty much fall apart organizationally and operationally. Yeah, what do I mean by that? Well, if not everyone's on the same page, management may start having some malpractice or leading the organization into a direction that was not necessarily approved of or blessed by the board. And that can lead to conflict. Does that answer your question, Adam? Sorry.
No, I think that's great. You know, a lot of folks are essentially running a multi-million-dollar business in their spare time, and so really getting a firm grasp on who they can trust and how far they can trust them is really something I think is an important skill to have and learn to navigate. And it sounds like, correct me if I'm wrong, but an audit's a great way to do a yearly checkup on your management company in some ways.
Yep. It's similar, you know, one analogy I would like to use is it's basically like your physical checkup at the doctor's every year. You want to make sure things are fine, that there's no blemish, things of that sort. And if there are things, then, you know, that does prop up in an audit, such as findings or whatever. These can be relayed to management and the board of directors in communication letters. And, you know, in the following year, these can be addressed and mitigated. So it's important to establish that relationship between not only management and the board, but between the management and the board with the auditors. So that way, everyone's working towards a well-running oiled machine. So
If I may add to what Everett has said, the auditors must be independent of the organization, number one, and the auditors work for the board on behalf of the board. So therefore, we are not beholden to management, but we are responsible to the board of directors, and therefore we are supposed to report directly to them any findings. Okay, so that's an important key element to the audit process.
thank you, Tita. Yep. So moving along, what does an audit entail? So we basically perform inquiries with those in operations, management. We also inquire of the board. Part of these inquiries usually ask whether or not if they suspect fraud within the organization. Fraud can come in primarily two forms: misappropriation of assets, which is essentially theft, stealing from the organization, and fraudulent financial reporting, which is also known as cooking the books, or, fidgeting with the numbers, inflating them, if you will, and deflating them where is good, So one area of concern for a lot of audits is whether an organization, because sometimes there's an incentive for management to make the numbers look good. Revenues tend to be overstated, whereas expenses tend to be understated. So that helps with, especially if you're going to overstate one and understate the other, you will have a significant bottom line. And that looks good when management presents their financial reports to the board of directors, So that's something we always ask of not just the management or the board of directors, but also employees, whether, they suspect any of their coworkers or whatnot participating in such criminal activity. And then there are other things that we do, such as basically asking the accounting team or the operations team for their books. So we take the books and we identify what we consider significant. So in most cases, cash, investments, property, plant, and equipment, land, records dealing with that, as well as revenues and expenses. And we basically test the transactions that go on for the year. So what does that warrant? That means we go out and we ask for like invoices, billings, bank statements, check receipts, ACHs, confirmations, things of that nature. And then we also do confirmations with the financial institutions of which cash and investments are held at. We also test an organization's internal controls. So again, going back to the point, making sure that, say for instance, all expense reimbursement reports exceeding $500 must be signed off by a CFO or a board member. We want to make sure that's being followed through, right? Because what good is a policy or control if it's not functioning as it's supposed to? Moving on is, sorry, go ahead, Adam.
That is a great point, and it's something I was hoping to know is reimbursements. Now, a lot of the times, $500 is a little bit high for out-of-pocket expenses, but board members or other folks sometimes are put in a position where they have to put money out of pocket to deal with a problem that comes up as an emergency. Maybe later on, if you could note the kind of requirements for showing that you are doing things appropriately, right? Because we want to make sure that the co-ops both are not doing fraud, right, but also are correctly representing the good work that they're doing and the care that they're taking. And that they're efficiently documenting that.
Yes. So in terms of reimbursement reports, to basically have a good process and policy in place is to make sure that whoever's submitting said reimbursement request have relevant documentation to back up what they're trying to get reimbursed for. So that includes invoices, credit card statements, billings, receipts, things of that nature. And then on the other side of things, you want to make sure that the policy in place is timely in the sense, and it stresses the importance of timely submissions. So you don't want to have someone submitting a reimbursement report a year later after the fact that they incurred it. And it seems like a trivial matter in the sense, well, it's only $100 and I'm going to just tell them anyways, right? But from an accounting standpoint, you want to have an accurate representation of when those expenses were incurred for. So one example is Christmas time and then New Year's, right? So, and especially if your organization is running on a calendar year basis, if the expenses were incurred, say December 24th, 23rd, and they don't submit it until February of next year, then there's going to be a discrepancy between what's actually belonging for when the charges were made versus when, the submission of the reimbursement is made. So you basically, when the board and management work together to develop these policies, just make sure that they are appropriate and reasonable for the organization. So again, Adam, you mentioned the threshold for getting approvals of these reimbursement requests. That just depends on the size and the amount of money that the organization deals with in the grand scheme of things. So if we're talking about Fortune 500 companies, it's, the threshold may be higher versus nonprofits or, startups. It might be a lower threshold, but that's just one thing to keep in mind. So, and then after we're done testing, we pretty much draft the financial reports and letters and then provide an opinion on the statements themselves. Does anyone have any questions or anything to ask?
Yeah, one in the chat might be a little getting ahead of your anticipating your presentation. Should the management company also be the auditor? Right. So if a co-op or condo association has a management company that they contract with to do a variety of things, including receive rent, carrying charges, or condo payments, and prepare the financials, should they also be the organization that conducts the audit?
So typically that would result in a conflict of interest. It's, for example, you wouldn't be auditing your own books, right? So that's one thing to keep in mind. Tina, if you'd like to chime in on this as well.
So, as auditors, we're actually reviewing and examining the work of the management company if they are responsible for maintaining the books and records. So therefore, it would not be appropriate for them to pretty much audit themselves. So therefore, that's something that we would do. On a grander scale, you do have major organizations with internal audit departments. And therefore, the internal auditors work for the organization, and then they are responsible for auditing books and records, as well as mostly compliance with respect to whether or not the organization is operating in accordance with rules and regulations. Okay, so you have your internal auditors, and they actually can help the external auditors, which is what we are, as part of their audit process. But no, the management company should not be the auditor as well.
Thank you, Tina, for chiming in. Does that answer your question, Adam? Do you have a follow-up by any chance?
I think that's right. And we got a couple more, but I think folks are anticipating what you're going to be getting to. So I will keep track of your questions, and then we'll take a quick interjection in a little bit and make sure that these questions are addressed directly, if not in the next couple slides.
All right,
Thank you.
Sounds good. Yep, thank you, Adam. Continuing on, the benefits of having an audit. I think we touched on this previously, but it basically provides readers and stakeholders comfort in the numbers that are being presented. They understand that, oh, the revenues and the expenses, they seem to check out. The auditor said so, so it must be good. It reduces the level of skepticism compared to, for example, unaudited financial statements. And usually lenders and big banks who finance loans for customers, when they quote unquote unaudited statements, are usually they are a bit more skeptical, to simply put. Also, sometimes when you are trying to get a loan, the lender will actually require you to have an audit done. So, for example, if the bank lends money to the customer, there might be some stipulations or clauses within the loan agreement, such as like a call for covenants, right? And that they have to meet certain financial ratios in order to stay within the provisions of the loan agreement. So during an audit, we would test for that and to make sure they are in compliant and that that there were no breaches of said covenants. So banks, especially lenders, find that very useful and can rest assured that they will get their principal back and be paid in whole. It's also great to see whether or not there's fraud. And, when an organization tells its staff that, hey, we're about to have an audit, it can also serve as a deterrence, quote unquote, like a scarecrow. So people would think twice about stealing from the organization. And at the end of the day, it just adds to your reputation, to the credibility of what you all do. People that donate, especially for nonprofits, and when you guys are soliciting, I guess, contributions and fundraising, when you have audited statements, it provides, again, comfort that, wow, this is an organization that's clean, that's righteous, that's doing what they're supposed to do in terms of carrying out their mission. So moving on.
You noted, I think maybe the biggest kind of reason to have an audit for a lot of the co-ops and condo associations, right? So while the income may not be, as high as, Fortune 500 companies, they are stewarding a piece of property that's worth millions of dollars. So I think the loan terms, I think, is really a good practice point. If you're not sure if you are required to have an audit, look at your loan agreement. Look at your covenants with your lender, your long-term lender, and also make sure you're checking your covenant if you got money from the District of Columbia, and checking in on whether or not that requires you as a co-op or a condo association to conduct regular audits. Also, if you are coming up on the maturity date for your underlying loan, be ready to have another for the loan origination process. Be ready for them to ask for audits. So you might want to get going on this ahead of time if you're going to be refinancing your loans. What happens if a lot of board terms are only a year? What happens if somebody's missed an audit and a bank is looking for an audit for past years when there was another board of directors or something equally odd kind of happens?
Sorry, let me just, is it okay if I rephrase your question?
Absolutely.
So are you asking if, say, they have never done an audit, but then all of a sudden a bank is, in order to make out this loan, they need 2 or 3 years worth of past audits done, right?
Or 1 year,
Yeah.
I've heard rumor that folks have dealt with auditing firms that just kind of disappear, right? And that is one of the kind of reasons to be talking with y'all, so they can make sure they're getting a good auditing firm, but also to know what to do to correct issues.
So Tina, would you like to respond to that?
So, and I'm hoping I'm understanding the question correctly. If someone had to get an audit in a prior year and it did not happen, yes, we have done and still do prior year audits. In fact, I was recently contacted by someone who needs 4 years worth of pension audits done because they missed them in the prior 4 years. So yes, we can definitely, and that, any audit firm can audit prior year records. okay? Just to get you back into compliance.
Wonderful.
Adam, do you have another different question than what I just answered?
I think that's helpful, and I think some upcoming slides will be. I might have follow-up questions related to this
Sure.
as Everett goes forward.
Sounds good. Yeah. So how does one prepare for an audit? Well, starting off, just having records readily available, whether it be on the cloud or in a file cabinet where it can be conveniently grabbed. Some of those documents will look like the articles of incorporations, operating agreements, bylaws, board minutes, special meeting minutes, your policies, operational procedures, SOPs, things of that sort. Again, financial schedules. So if, for example, QuickBooks, your QuickBooks file, your trial balance, your general ledgers, your journal entries, basically all records relating to the financial activity from the organization. And then also pretty important agreements and contracts. So if you guys have entered into like loan situations or refinancing, we'll need all that for an audit. Lease agreements, whether you're a leaseor or leasee, and all the related tables. And then especially if you all are receiving grant money or contributions from donors, we're definitely going to be asking for those as well during an audit.
Hey, Everett, can I ask
Yes.
you for that?
Yeah.
So, we're asking for all this information so that we get a really good understanding of who you are and what your business is, okay? Because we cannot do a really good audit if we don't know who you are as a business and we don't have a good understanding of your business operation. Some businesses are pretty complex, and so therefore it takes a lot of time to really understand exactly what the business is and the services provided. So therefore we spend a lot of times talking to management and staff and the board, just so that we really fully understand what you're all about. And these documents help in that regard, okay?
Thank you, Tina. That is absolutely right. And then the process for choosing an audit firm. Tina, I will defer to you on this part.
Okay, so generally what happens is that an organization, and for the most part, the board is involved, they draft what is referred to as an RFP, and that means request for proposal. And they document in that RFP things that they would like their auditor to be able to do for them, okay? Some of the items would have like specific timelines in which they would want the auditor to meet. They might want the auditor to help them develop certain schedules, such as fixed assets, investment schedules. They might need their assistance in that regard. They might want their auditor to present at their board of directors meeting the audit report. So they have a long list of items, or sort of like a wish list, that they would like for their auditors to be able to do for them within a certain time frame. Okay. As an auditor drafting a proposal, we look at the RFP and we respond to that RFP. In other words, we provide a description of who we are. We give them references that they can contact for information about our firm and our services. We give them an overview of our audit approach. So basically, we respond to their RFP, to their questions, to their list of things that they would like us to do in the form of a proposal, okay? And the proposal goes out to management. They will then review the proposal, and the proposal also includes a fee schedule. It also includes a list or bios, many bios of individuals who would be working directly on their audit. It just pretty much tells the potential client who the auditor is, who the audit firm is. It gives you a little bit of a description of who we are and what we're all about. If a potential client is interested in the proposal, they would reach out to us and maybe have some sort of conversation, might want us to meet with a couple of members from the board. They may have direct questions to ask. And so therefore, we're trying to get to know one another before the potential client makes a final decision.
Tina, if you don't mind, I would love to, think that we could have an RFP and get responses for a number of the co-ops I work with, but what does something a little less formal look like?
So less formal is we get a lot of our new clients through referrals. Okay. And so someone will refer someone that they know to us. Let's say they refer them to me because I've done their audit. Then I would arrange a phone conversation or Zoom meeting or Teams meeting with that individual. And then we would talk about ourselves. I would get an understanding of who the organization is, what their needs are, what their past audit experience has been. If they're wanting to switch from one audit firm to a next, I would want to know exactly why they want to switch. And maybe, so it gives me an understanding in terms of what they liked and did not like, so that I don't repeat the same pattern. And then I talk about our firm and our services, okay? And then afterwards, I do say, if you like, I can give you a proposal. So in other words, I'm giving them a proposal that pretty much outlines who we are. It includes a fee schedule. It includes a milestone schedule of deliverables of information. And then I send that to them. If that's something they want, they discuss it with their board and other management, and then come to a decision. Or they may say, okay, I like you, why don't you send us an engagement letter? Okay, so we're pretty much will do whatever that potential client would like us to do in terms of any formalities with regards to the audit.
Great, thank you. And if maybe this is something you'll address as you go through further slides, but knowing the timeline and when to reach out to auditors to kind of kick off this process is something I think would be really helpful.
So I think the timeline is dictated by management in terms of when they feel they need an audit and when they feel they will be ready. Okay. Some grantors require an audit, and they might require an audit within a specific time period. Many grants that I've seen, they want an audit after no later than 180 days after your year end. All right. So in other words, the timing is largely dictated by any requirements of a grantor, any government agency, lender, so that's, or the board itself. So that would dictate the timeline, and then from there, management will reach out to inquire about getting an audit. The most important thing is that once you make that inquiry, you just want to make certain that your books are in good enough shape where it wouldn't take very long for them to get ready. So therefore, if you need an audit, let's say you reach out, you need an audit within a month, then there should not be any problems. The books and records should be in good enough order so that you are indeed ready for an audit within a month. But it's largely determined on external factors for the most part.
Great.
Right. So I guess without further ado, we can look into what the expected audit timeline is. So when all parties, and it's also would be in the engagement letter, when fieldwork starts, the preliminary stage is usually the weeks leading up to that. And the week prior, we usually have meetings to see where the status of all those items are. And we usually, when an audit firm sends out an engagement letter to the auditee, there's a what quote unquote PBC list, which is basically a long list of documents and schedules that we will need to basically begin the audit and sampling. Sampling being choosing items to test. Then during field work, the actual week or 2 weeks that people are scheduled on, and it can go up to a month, but depending on how big the organization is. But for nonprofits, it's typically 1 or 2 weeks. And that's when the auditors would arrive on site, view the support, and pretty much do the audit. After field work is when the drafting of the financial statements and the reports would be done. Usually the process entails getting the drafts out, proofed, and then management has an opportunity to look at them, provide their feedback and proposed edits. Once that's been done and knocked out, you have the acceptance of drafts and pretty much just finalizing the report.
And sorry, just to clarify, management here is that would that be both the property management team or the whoever's managing the audit?
So whoever would be the point of contact. Usually when we say management, it's the ones that are in charge of the operations at the organization. This typically falls to the CEO, executive director, or the CFO. And sometimes, depending on the organization, there's also another level of review. So you may have an audit committee that likes to review the statements as well before finalizing, and other type of committees. Maybe a finance committee also is involved. Just depends on how the organization is structured and how many levels of review they want to go to.
So in a limited equity housing co-op with say 5 or 6 board members who meet monthly, and generally, you know, I don't know that a lot of folks have standing committees. Would that be the board plus whatever management agent? Do you think that would be the right folks? Should we read that as the board when you refer to management?
So sometimes, to answer your question, management may review it first. So I guess the manager or whatever would look at it and then pass it up to the board president or the board treasurer, and they'll look at it, and then they'll bless the statements, give it back to the auditor, and then they can finalize it. So, but typically the board does look at it, you know.
So yeah, so it sounds like for those of us working in smaller orgs, right, whether or not they hold property that is worth quite a bit of money, a lot of these folks are doing it themselves. So management, you know, I want to make sure we're being clear that management in our heads when it comes to like multifamily building, we generally think, you know, property manager, the leasing folks, right? So that's I think what we can often think of. So the management team here would be the audit, the point of contact. So that would, to me, that sounds like it would be the board of directors of the co-op who are overseeing this, maybe with assistance from the property manager as they often hold documents. Does that sound about right?
Yes, that is correct. I would say.
Yeah, so, yep, to your point, you know, a lot of times you can have overlap between management and the board. However, usually with that said, there are also plenty of members on the board that are exclusively just on the board and not a part of the actual management or the data. They don't oversee the day-to-day, if that makes any sense.
You'd be surprised how many we'll say opportunities there are for board members to step in and do things that, you know, they didn't know they were signing up to do, including, you know, negotiating trash contracts, immediate pickups, emergency plumbing repairs, you name it. People are doing this themselves, and we want to make sure that, you know, they are arming themselves with the best way to show that they have done the work competently and, you know, without any hint of fraud.
Yep, without a doubt. And so going back to the slides, opinions, there's 3 or 4, if you will, the 4th opinion not being technically an opinion, but essentially when you go through the audit and you get the reports, you really just want to see an unmodified or clean opinion, which is the best opinion you can get and the opinion that you should be striving for. The other opinions out there is a modified opinion, and essentially there's been departures from GAAP. GAAP is generally accepted accounting principles. So there are principles for which would constitute good accounting practice. And so this is not something you would want on your audit report. The other one is an adverse opinion. And this one's a bit more serious. Basically, it means the financial records are pretty much in a mess. And it's also indicative of fraud. So there's much more concern when an adverse opinion is issued. And again, you know, for an organization that wants or needs to do some type of refinancing or borrowing, this is not the opinion you want at all. And then the last one is a disclaimer of opinion. So like it says on the slide, it's not an opinion of itself, but usually this comes about from a lack of cooperation with the management team. So if they're being unresponsive, ignoring the auditors' emails, you know, just quote unquote ghosting the auditors, this could come about.
Can you talk what these mean and how I don't want to say negotiable, but how much the board can interact with the auditor as they're preparing this? You know, there's a wide range of management companies that have a wide range of competence or when it comes to working with multifamily buildings and with co-ops in particular. I don't know, you know, I don't know how many use GAAP accounting, but I can imagine that a number of them do not. And so kind of talking about how the co-op can work with the auditing firm to navigate this process and make sure they have a good representation of what they're working on would be really helpful.
So a lot of times to help get the books in order, like you said, if they're using some different type of accounting approach or what we call, you know, a special framework per se, it's best to get or bring in a bookkeeper that will be able to reconcile the 2 different frameworks used, if that makes any sense. So Tina, does that sound about right to you?
Yes, so basically you want to make certain that your financial records are correct. There is no requirement to prepare your financial statements in accordance with GAAP, okay? That's an internal decision, and generally that's what is accepted by third parties as well as stakeholders and those who are interested in your organization. But if you were to prepare the statements in accordance with GAAP and that was not how you were operating throughout the year, then yes, we would probably meet with the person responsible for maintaining your books and records, get a sense in terms of how much they know about GAAP and their comfort level in terms of making certain that the year-end account balances are in accordance with GAAP. And if we determine that they're just not comfortable doing that, they don't have the know-how or the experience or expertise, then we might recommend that management consider bringing in outside bookkeeper, someone temporarily to help get their books in order so that the audit can take place. We work with a number of outside bookkeepers who are happy to do that at a nominal rate. So therefore, we try to keep in, take into consideration the financial status of the organization, as well as their financial needs with respect to their statements. Okay. Did that answer your question, Adam?
I think so. I think so. Thank you.
And then we have our management letter. So here, this would be the letter which relates to management, whatever the findings were and how it impacted the financials. So here you would also have suggestions for, best practices. So certain recommendations may be, for example, if there's a bunch of reimbursement requests, that kind of activity that happens within an organization, but there's no policy in place to kind of streamline that process. One recommendation may be to have a policy in place to basically to check on the reimbursements to make sure that the reimbursement requests are reasonable and allowable, and basically that people are not just buying things using the organization's credit card for their own personal benefit, and that actually has nothing to do with the organization itself. Also in the management letter, it would just basically emphasize any accounting pronouncements. So usually every year there's some type of accounting standard updates that tweaks the way things are presented or accounted for. And so here would be where you all at management would get a heads up into what's coming for the following year. Then you have your board letter, and basically this details out what the scope of the audit is, if there's any significant audit matters that need to be brought to the board's attention, if there were any changes in accounting policies that warrants their attention. And again, in the board letter, there may be some matters relayed to them, findings as well, that was not communicated to management, because at the end of the day, the auditors are responsible for reporting to the board and not management. So that could include adjustments, especially maybe fraudulent matters as well. If we find that management was the one committing fraud, we would relay that to the board, and we would have to, that would be something to be hashed out,
Can you, not to ask you for anything too to ask you for spicy details. Can you give like kind of examples of some of these things as to what to look out for? And just restating again that this management letter and the letter to the board will likely be going to the same people in a co-op or condo association type setting, since limited hands available for this work, and folks end up overseeing a lot of things themselves.
Yeah, for sure. I can provide an example.
And
So-
especially any more examples in like kind of multifamily auditing kind of setting, what to look out for, what kind of things to expect in the management letter. You know, tons of examples would be lovely.
Yeah, so one example, one story I can think of is I was working with this finance director, and he was the point of contact for the audit. And essentially, there were two ways to get reimbursed for spending, either through check or the corporate credit card. However, the policy in place only pertained to checks written over a certain amount. So what this person did in order to bypass that is that they would use the corporate credit card, and they actually set up a fake vendor across the country and basically have fake invoices billed to the organization. Of course, because the policy in place only affected checks written over a certain amount, and that essentially for the corporate credit card use, the statements have to be reviewed by a board member. But the problem with that was the board actually really liked, they fancied this director of finance. So they didn't really question the corporate card spending. And obviously there's plenty of charges on the corporate card. So if you can, usually people aren't asking for the nitty gritty, and you can just say, oh, it's for this project, it's for that project, whatnot. It really can go unnoticed. So that's where I basically was reviewing these invoices for the credit card, and it just looked really sketchy. And then when I followed up and did some inquiry with the finance director, he seemed a bit nervous or shaky. And for some strange reason, this would be the support that he would get to me, or she would get to me as soon as possible. So that kind of raised a red flag. I've been sending emails out requesting X, Y, and Z, but this is the one that they're able to get as soon as possible. So it seemed like there was a sense of urgency to sweep it under the rug from that person's perspective. But in the letter, it would not have gone on the management letter, but in the board letter, we would relate what happened and what we noticed, and how this could be a pervasive issue for the organization. And that's not something the board obviously wants to hear, but has to hear, if that makes any sense.
It does. And so in the housing setting, would that include things like checking in with vendors? There's a lot of charges that management shows the board every month, and it's sometimes really hard to determine what is legitimate when going through it. Is it reasonable to expect an audit to catch things like this if they're not able to on a month-to-month basis?
Well, the best practice really is basically just have a policy in place to ensure an audit trail. So if you're going to spend money on behalf and for the organization to carry out its mission, it's really, you just emphasize it's not that hard, especially in this digital age that we live in, to get credit card statements, invoices, and billings. Just be responsible and keep tabs on what you're spending for and have sufficient evidence. You don't want to have lack of support for whatever charges you are incurring, right? Because that would be a red flag and suspicious to the board that are looking at these charges on whatever basis they are. Does that answer your question, Adam?
I think so. I mean, I think well enough. It's translating to y'all are a large firm, and you cover a lot of clients with large budgets, and translating that into the small, like 30 to 50 unit housing co-op with, thin, intentionally, low budget is a little bit of a challenge. But I think folks on this call are competent and can take away a lot of what you're sharing.
It's also good, if you know that you're about to make a purchase for the organization, say, a fix, like an improvement or repair or some type of maintenance charge, and it's going to be a big bill, just run it by a board, just shoot the board an email saying, hey, I'm going to incur this charge. So the best thing you can do is to keep in communications and everyone's in the loop as to what's going on. So, yeah. So again, to reiterate what third parties are looking for, they basically want a clean opinion. They want comfort in the numbers when they're looking at it, that it's reliable. It is what it is. There's nothing funny going on with their books. And this helps the organization illustrate that, we're willing to invest money to double check our records. So this should give you all, for example, a lender, the confidence to loan us X amount. And Terry, I believe this is up to you now to take over.
Thanks, Everett.
No problem.
I did see that there was another question in regards to funding depreciation. I just wanted to answer that really quickly. It's really just a planning tool. They probably made that suggestion because typically funding depreciation creates almost like a savings amount. So you save the amount of depreciation with the intention of purchasing capital assets in the future for that amount.
So in a multifamily housing situation, would that be maybe based on something like a capital needs assessment that looks at the bones of the structure and then says, you have blank amount, like every year that goes by, you need to sock away this much dollars to replace the plumbing?
Actually, it's more so looking at what your current fixed assets are and what the amount you're depreciating every year, and then saving the amount of depreciation in order to make those repairs or buy more property in the future.
So can you give an example of a fixed asset?
Especially
if you can relate it to multifamily housing.
Yeah, so fixed assets are in multifamily housing would be really anything like furniture, leasehold improvements, things that have to do with the structure of the property, external structures, large repairs, plumbing, HVACs, water heaters, things like that.
So in a sense, it would be planning for replacing those items?
Yeah. And Everett, if you're cool, I only have 3 more slides. If you could just handle the presentation for me, I'd appreciate it. So I'm going to talk a little bit about the Form 990, which is the informational return that nonprofits have to file annually. So not only co-ops, but all nonprofit organizations have to file a form of the Form 990. So there's what we call the long form, Form 990, and then there's the short form, the 990EZ, and then the postcard form, which is the 990N. They all have their different thresholds. The 990N specifically would only be filed if the organization brings in $50,000 or less annually. So the purpose of the Form 990 really is to be transparent. The IRS wants to see what the organization is doing with their funds. Creditors like to see the Form 990 in addition to the audit sometimes, along with, members and donors. It's an easy way for some people to break down the different activities, and it provides more information on the accomplishments that the organization has done throughout the year. A lot of the times we take the information from the financial statements and kind of pick it apart even more. So it gives a broader picture of the organization's activities. And you can go to the next slide, Britt. So the 990s changed significantly since 2008. The IRS is like, we want more information from you, basically. They want more disclosures on governance and policies, family relationships, compensation, use of management companies for key roles, executive director, finance, things like that. And then they want to know, have you made any changes to your articles of incorporation or your bylaws? Significant changes trigger changing your mission, changing the structure of the board or the executive committee, voting members, and the amount of hours that are supposed to be spent. And then you can go to the next slide. So yeah, it really does provide a more in-depth information on the policies and structure of the organization. There's a board list that's provided, and a majority of the information on this form is publicly is available to the general public. So that's something to keep in mind. Other things that are disclosed, if you provide grants to other organizations or individuals, which I'm not sure how much the co-ops are doing, but you want to report the number of contributions you're receiving. I saw somebody asked earlier if you should keep track of contributions that are over $500. From an audit standpoint, and forgive me if I'm speaking out of turn, but I would say you would want to track all of your contributions just to make sure that they're, the total is being reflected accurately. But in terms of what needs to be disclosed, it's usually $5,000 or more. And again, there's a lot of schedules that can go with the Form 990. There's a public support test, that's Schedule A. Schedule D is a reconciliation to the financial statements. And yeah, so that was a pretty high level overview of the Form 990. Hopefully everyone has been filing their Form 990.
Harry, can you speak about the penalties for not filing?
Yeah, so typically the IRS will assess penalties and interest for not filing. I think it's up to $10,000 or 10% of total net assets, whichever is higher. And if an organization doesn't file for 3 years, they essentially lose their tax exempt status.
Great. And can I, in what instance, sorry, does it make sense to have the 990 and the audit prepared at the same time? It seems like there's a lot of overlapping kind of tasks.
So usually we kind of piggyback from the audit. So we wouldn't prepare the Form 990 until the audit's completed. But a lot of the information that's on the 990 we get from the audited financial statements and their support.
Got it. And one could contract with a firm to do both.
Yeah, usually when organizations hire an auditor, they typically engage them to do the Form 990 as well. Doesn't always happen, but usually that's the case.
Got it. So thank you. We are going to go into the Q&A section right now. I got a couple I'm going to pull from the chat. So I have a question. Would a compiled financial report replace an audited report? And if not, why do costs pay for an accountant to just complete the financial report generated by the property management company?
Okay.
I'm not sure you could speak to the state of mind of folks.
So he's saying, would a compiled financial statements be sufficient as opposed to an audit report? I'm trying to understand.
I think something that would be helpful is going over the difference between compiled financial report and an audit or an audit report, and what each of those documents can be used for. I know in my experience, sometimes they're both used for the same purpose, either reluctantly so or not.
Okay. So basically the biggest difference between the two reports is that the compiled report is literally taking the financial information from the organization and sticking a letter on top of that report from the accounting firm. Okay. We are not attesting to the accuracy of those numbers or the financial status of the organization in any way. We're literally just taking what you've given us and just putting our letter on top of it to say, hey, these are compiled statements that were pretty much provided by management. Okay. And really there's no reliance on those statements at all because they have not been audited. In other words, with regards to an audit report, we are attesting to the accuracy of the financial statements. That means that we've examined the financial records and any underlying support to those records. We have tested internal controls with respect to the financial reporting process, meaning that we have looked and made sure that invoices were approved based on the signature initials of management. We have made sure that those who are authorized to sign checks were the ones that had signed them. So we're literally testing to the fact that someone looking at an audit report can place some reliance on those financials.
Great. And then we had a couple questions on how long should they expect an audit to take, right? So this goes to how early they need to get in touch with folks ahead of their external deadline, as you guys noted. So how long the audit process would take, and of course, this is for usually 30 to 80 unit multifamily building. And then the cost associated with such an audit.
So the time frame literally, it depends on the size of the organization. Typically, for an average organization, it may take us up to 4 weeks to complete an audit from start to finish. And when I say finish, that means issuing a draft of the financial statements. Okay. The cost varies as well. It's largely dependent upon gross revenue. Our lowest fee is $10,000. Unfortunately, regardless of how much you make, even if it's very little, the audit process is still the same. We still need to do testing. We still need to adhere to a lot of audit programs on our end to make certain that we documented the audit processes properly, our findings, because we as auditors are subject to peer review, in which our regulatories will come in, review our work, literally conduct an audit on our work. And so therefore we need to adhere to certain standards. But that's basically it.
I'm sorry. So what was the dollar amount that they can
So
expect?
sure. So for our firm, I think the lowest we can go is 10,000, but the fee varies from firm to firm. And I think largely that fee is largely dependent on the size of the organization, which is largely based on gross revenue for the most part. It also it also takes into consideration the complexity of the organization's financials. So in other words, if you have a number of loans, different investments, escrows, endowments, that is also factored into the fee.
All right. So I want to, I hope I've got all the questions, I've represented all the questions that were put in the chat. Thank you to everybody who put questions in there. Please either let me know either by using the chat if you have any more questions, or if there's anything else that we should circle back to address. I want to thank you all for your presentation. And I, taken note of a number of forms that you guys noted folks should have. Do you all have available or know where folks could get template forms? I know some of these things are like conflict of interest forms are pretty straightforward, but having a reliable list of forms that they know will stand up to the rigors of an audit would be helpful.
Sure, I can actually send you, Adam, some examples of accounting policies and procedures, conflict of interest policy, whistleblower. So there are certain policies that are required or asked, let me put it that way, that are asked on the Form 990. And it is best to be able to answer yes, that you do have those policies. I can send out those for you to share with everyone else.
I think that would be great. And folks in the are asking for the best way to contact you all.
The best way to contact us. Can we give you our number? I don't.
Yeah, we can. Let me see. Do we have it in the?
I think the best way to contact us would be by email.
Yeah.
Would you all mind dropping a good email or phone number in the chat? Or
yeah.
Thank you, Terry.
Sure.
And of course, we can follow up with this information along with what you send over, Tina, to folks who have attended the presentation. All right, I'm gonna make a last call for any burning questions. So if anybody has anything they want to have answered while we have folks on. Seeing none. Well, move forward and start closing out this the presentation. So we want to thank our community partners, Neighborhood Legal Services Program, MICASA, and Housing Counseling Services. These are some folks that we are work hand in hand with in a lot of areas. Unfortunately, not all of them could call in tonight, but we do have Elizabeth on the line. Elizabeth, you want to go over your services really quickly?
Sure. Hi. Yes, I am a supervising attorney with Neighborhood Legal Services Programs Housing Cooperative Preservation Initiative, and we provide general counsel style legal services to co-ops. What that means is we limited general counsel style, but we basically provide a full service of all the different types of legal services you might imagine a co-op will need, with very few exceptions. And our services are tailored to the co-op in particular. Some co-ops we work with pretty extensively, other co-ops we provide, just a single legal service here and there. And then we also work with 2 asset management partners who provide financial services, things like help with renovation planning, to many of our co-ops as well. I will say we also have recently been collaborating a lot with other folks who are providing technical services in the co-op community. And so even if you already have services from another organization, if there's something additional that organization is not able to help you with, we're sometimes able to hop in and work together with that existing organization to fill a gap. So pretty flexible in the types of services we offer, and always happy to hear from new co-ops who think they might be interested in our services.
Great. And Elizabeth, I believe y'all are one of the very few legal services technical assistance provider, especially since a lot of the law school clinics have withdrawn from this kind of area.
I think that's right. You've reminded me, Adam, that I didn't mention a basic portion of our services, which is that they're free. So I think with that caveat, we are one of the very few. There are certainly many law firms that provide assistance to cooperatives, not for free.
Elizabeth, would you mind dropping your best contact information in the chat?
Absolutely.
Wonderful. And I hope you should see that popping up in just a moment. So if you're looking for, a legal opinion, give Elizabeth a call. Great. So Housing Counseling Services is a core partner with us here at Douglas Community Land Trust. We are fortunate enough to have the lead of their co-op department on our board of directors. And they are very available to provide ongoing technical assistance to co-ops. They also are the ones that administer the ERAP, or Emergency Rental Assistance Program, here in DC, along with a number of other kind of services that are noted on the screen. So I encourage you all to reach out to HCS for info and referrals on their process. One of our other partners is, as I shift programs, sorry about that. Do you see that? Am I showing the Leadership Academy flyer? Okay, hang on a second. Can someone please hit a block? Thank you. Let me see. So, okay, so our partners at MICASA They, as part of their leadership academy, we are have a training coming up on March 24th. So this is going to be going over understanding financial statements for effective asset management. So I think this is a great training to attend if you, for when you do receive a audit and want to know how to move forward with the findings on that. So using that would be very helpful. And they are also very committed to language justice. And I believe it will be in both English, Spanish, and perhaps Amharic. So we hope you all can be a part of that. Let me see. All right, so we just want to thank you again for being a part of today's training. I'm sorry, navigating between screens, a little snag. We would hope to see you in soon. And Sylvia, if you wouldn't mind closing us out, that would be great.
Sure. So thank you again, everybody, for coming today. And we want to thank JM&M for providing such a helpful training on how to navigate the audit process. Also, our community partners, Neighborhood Legal Services, Housing Counseling Services, and Mi Casa, and of course our interpretation team. And please, I hope to see you at the next training that we provide. And again, this is, stewardship is such an important part of being able to succeed as affordable housing provider. So thank you.
Thank you, everybody. Hope you have a lovely evening. And take care.
Having us.
Thank you all. Thank you for having us. Bye-bye.
Bye.